hold it again. Me no feel like it again, I hold it again. Me no feel like it again, I hold it again. Because me when me a bun, me know me again. Me no feel like it again, I hold it again. Me no feel like it again, I hold it again. Me no feel like it again, I hold it again. Because me when me a bun, me know me again. Me no feel like it again, I hold it again. Me no feel like it again, I hold it again. Me no feel like it again, I hold it again. Because me when me a bun, me know me again. Me no feel like it again, I hold it again. Me no feel like it again, I hold it again. Me no feel like it again, I hold it again. Because me when me a bun, me know me again. Me no feel like it again, I hold it again. Me no feel like it again, I hold it again. Me no feel like it again, I hold it again. All right, amazing morning, amazing morning, amazing morning. Let's go.
Rising, Grand Rising.
And rising.
Grand Rising.
Grand rising, guys. If you're able to be in front of your computer, I'm looking at GBP USD. Open up your charts and let's have a look if you're able to. So I'm just going to have a little play around. You can watch my screen, see me what I'm doing before I start getting into it. I'm just going to mark up some charts real quick. And we can talk about some different things today.
Between us, I cannot stand losing you. Whoa, whoa. All these feelings intertwine. Oh, fighting the urge to reach out.
All right, so we can see from our charts in regards to GBP USD, we're at the top of a range. We're at the top of a much bigger range, is that bigger yellow line, that solid yellow line. And we can see how the market came up, touched that yellow line, created some reversal candlestick patterns. You can see some wick rejection coming from the top, and the market started to move down within this range here. Okay. I'm gonna show you guys some little tricks and stuff. If you guys, when you're drawing your navigation, your structure, to try and help you when you're drawing your structure. Now, one thing you can do is this. Have a look. If I go into my indicators and look at my volume, all right. So where the volume spikes, especially if you're looking on maybe like the larger time frames, for argument's sake, that's where it's identifying your structure. You see here in this spike, well, that's the top end here, all right. And you can see a spike down here. That's going to be your structure. Your volume is giving you indication of where that structure is. You understand? In regards to, when you're drawing in your ranges. All right. The structure can give you a clear indication. If you're ever confused, you shouldn't be. But if you're ever confused, I'm saying to you, the spikes in volume show at that particular price point, at that particular time, that there was a huge injection of buying. Do you understand? It shows you where the battlefields are. There was a battlefield right here. Look at this spike here. Boom. To stop this price falling down here, huge spike in volume occurred right here. Pushed the market in this direction. And to stop this market going up and up and up and up and up, boom. Huge spike in volume. Pushed it down. So when you're looking at structure, this is giving you those real structural points where you can see. That's me. It's giving you those structural points, yeah, where you can see, you know, where those walls are, where you be placing that structure. Okay. Now, like I said to you, we can see here on the much bigger time frame in here how the market came and tapped into, you know, our yellow line, our wall, or our higher time frame Russian door, and had a reaction from there. Okay, had a reaction from there. And like I said to you, say for example, my point is, you know, if you're finding it difficult to see structure, say for example in here, where you can see these spikes are giving you indication. Even if you might not be able to see it on the 4-hour time frame, the spikes are giving you an indication of where that structure is. All right, you know, so we can see over here some structure. You can see over here some structure where these impulses of volume, you know, came into the market. Okay, we can see these huge impulses of volume. So at the moment, you know, you might as well say we are sitting just below this kind of level in here. The structure, we've broken this structure here. We had a little wick past it. Then we had some candles kind of dancing around in here. Okay, and you know, really what we want to see on the bigger picture, having a look at this on the 4-hour time frame, is, you know, where I really want to see this market break outside of this yellow line. Okay, this one here. I'm gonna make it. I'll make it thicker, so you know which one I'm talking about. I really want to see the market break outside of here. Okay, you know, I'm not gonna be in a rush to necessarily hit the button over here until we break outside of this yellow line. If the market comes back up to this little trend line in here, then great. All right, great. Okay, let's have a look at this market here. You can see here was an entry that I looked at previously. Have a look at it. Okay, look at it. So that market, if we was to go back in time, let me get rid of this. Okay, let's get rid of this. Now, the market is moving down within waves. Okay, the market's pushed up above some previous highs over here. The markets came to this point over here, and if this was in present time, have a look. I can go back in time, like so. You know, we're watching this market, and first and foremost, if I would have, this is what I would have looked. All right, because hindsight's a beautiful thing. It's easy to break things down in hindsight when you've got the information. Okay, and I'm gonna hide this for now. Okay, so but we would have been doing this. Have a look. There would have been some lines like so in regards to this impulse. Okay, and then there would have been some lines like so in regards to this bullish impulse. Okay, because like I said to you, hindsight is a beautiful thing. It's easy for us to trade in hindsight. Okay, so as you can see, this market was and we wouldn't have known this. So let me take this out. Wouldn't have known the angle. Okay, so I want it to be as real as possible. But you see, every time this market, first and foremost, I'll be looking at this. Have a look. How would I trade this? If I think this market is now tapped into this yellow line, this solid yellow line, and falling bearishly, first thing I can do is this. Have a look. Somebody tell me what I'm looking for when I do this. If I do that, what is it I'm looking for when I pull out my Fibonacci? So I don't really use Fibonacci in regards to 618 and all them 786 retracements, etc. But I do pull out my Fibonacci every so often for a couple different levels. What levels are they? What levels are they that I normally when I pull out my Fibonacci? Anybody know?
50% level?
Yeah, I'm normally interested in that 50% level and maybe even going into the 61.8. So at that 50% level here, okay, bearing in mind that I don't know the overall angle because the information hasn't played out yet. So I'm going to put a little line in there and be like, okay, this is a 50% level. And at that level of retracement, okay, I'm going to be seeing what's happening on a smaller time frame. I want to see what's happening, going to be happening in this impulse as it approaches that 50% level and gets into that 50% level, all right? So I want to do that. I'm going to drop my time frame down to a 15 minute, okay? And I know that the market can push past that 50% level, but either way, I'm going to read and react to what it does. But I'm very interested in what it's going to do at that 50% level. Just going to stop moving. I'll come to the conclusion this is a trading problem, I don't know. Anyway, but like, yeah. So the market is here, pushing up in a little impulse over here. And I'm very, very intrigued of what's going to happen when it gets to that 50% level. Have a look. I'm going to put it on a free speed. I don't know what's going to happen, but let's watch. All right. So we got up to this level in here, and have a look. That is on the 15-minute time frame. Let me rewind a bit. It moved a bit quicker than I thought. This one. Whoops. The computer's moving so much, it's like making things jump around. Let me get rid of one of these. Try and throw some things overboard. Throw some things overboard. Throw this all overboard. Alright, trying to throw some things overboard so things can move a bit quicker. Sad but true. All right, so let's go back over here. Sorry, because like I said to you, this moved pretty quick. Didn't want it rewinding that quick. Let's go back a little pace. So we understand that at 50% retracement is an point of interest. Yeah, you hear people say POIs. All right, point of interest. All right, as well as imbalances are POIs, as well as candlestick zones are POIs. I'm going to drop down here to my 5-minute time frame. I said I don't want you guys any lower than 5 minutes, so that's what we're going to do. At the 5-minute time frame, have a look. We can see structure. Let me quickly go and unmute something as well here. Have a look. It's not the easiest to be able to see, so I'm not going to bother here. But you can see where these spikes are. Wherever these spikes are, we have in structure. Okay, so look, it's a bit more difficult to see. Maybe if I stretch it out more. Oh no, actually, it's not going to change. All right. So we can see a spike here. You can see a spike here. See, we can keep going seeing these little spikes. These, when you go straight up, are relating to structure. Yeah, are relating to structure. Okay. Now, at this point in time here, we can see this potential 5-minute structure. Okay. And it's been nice to see a close below this level. Okay, but on a smaller time frame, which I don't want to go down to, but on a smaller time frame, you know, this would be a close below that level. It would do, right? Let me just click these forward one at a time. So this is definitely a close below that 5-minute structure over here. This is a close below the 5-minute structure. This push up into these levels here, closing this small bit of imbalance. There was imbalance here. Have a look. There was imbalance here. In between these 3 candles, this one here had some imbalance. This spike came up here and closed that imbalance. Let's have a look. We can also see some small imbalances up here. It's going to mark off the whole level. All right, like so. Let's see what happens. Play it forward. Not yet. Not yet. Not yet. Not yet. That looks like a close to me. All right, that looks like a close to me right there. So for argument's sake, we had our indication, we had a correction closing some imbalance, we had a close up here. Now, if I wanted to, I'm going to place my stop aggressively. My entry is going to be on that close. My aggressive stop is going to be above the last high. My safer stop is going to be above the swing high. Okay, so when we do this, when we're doing our back testing, we can test them all out. Yeah, we can test them all out. Now, I am a little bit concerned by the fact that this is the bottom of the range here, this little white range. So even when it gets down here, you're trading towards structure again. All right, and like I said, once again, if you have any concerns about where the structure is, you can use your volume chart to identify spikes in volume, and that normally 8.5 times out of 10 is going to give you a clear indication about some structure in here. Okay, now you have to do it where you can see the data. Here, unfortunately, we're not getting too much information on the data, but if we're going back here, you can see that spike over here, so structure. Okay, we see a spike over here, which is the cell structure from up here. Okay, we can see this spike over here, which is some more structure. Let me try and draw it with a different color. I think this color is just blending in with everything. Let's go over here. Let's make it yellow. Okay, let me go and grab one. You see there's a little spike here. We can use that to help us identify the structure. Okay, and over here is a little bit of blur. That obviously we'll be able to see in this time frame is not showing us it's grouping these all together. Okay, but let's have a look here. So let's play it forward and see what happens. See which one stops us out. One was an aggressive entry, which is there with our spread times 2, and one was our safer entry, which is above this high. Let's see what happens. Oof, looks really good. All right, looks really good. Okay, to the point where this market, this came all the way down here, and we pushed all the way down here. Our aggressive entry is looking like a 1 to 4. Our safer entry is looking like a 1 to 2. Okay. See what did I say? I said at this little white line here, I'd be concerned. Yeah, because it's the bottom of the range. But we've seen it absolutely spearhead through this range. And that spear ultimately captured all of the liquidity, nam, from underneath this level. So if I was privy to that and I was sitting there watching that happen, at that point in time, this here structurally would have been a TP, would have been us trading to structure. All right, so we'll just show it to you on a 1 hour time frame for argument's sake. We can see over here this kind of spike over here in volume around this area here. So this spike over here. Either way, this is an area of point of interest and a TP level. That if you'd place your TP there, I would have understood. I would have been like, okay, cool, I get you. All right. So remove this. This is another previous zone. Let's go back to our 5 minute and have a look. Now let's see when that market pushed all the way down in here, gave us a great 1 to 2 and a 1 to 4 of our more aggressive entry. There's no way possible any of these entries that you lost money, because at the point when you get to a 1 to 2, or if it's a 1 to 1 based upon if you're doing a challenge and depending on how well you're doing, these trades should have been risk-free, in my opinion. Now, some people don't like to have to move their stops and make their trade risk-free. They either want to win or they want to lose. I get it. I do get it, because sometimes markets do kick back on you on that. But I think if you're doing a challenge, you really need to preserve your capital. You really need to protect your position first and foremost. Okay. So you can see here. Let's play it forward and see whether or not when this kicks back, whether or not this market here is going to kick all the way back up into these levels. Okay, we're not expecting it to, but it may do. It may decide it wants to come, push up before, grab some liquidity. Either way, this is a successful trade. But for the guy who took the bigger risk and he fell asleep on his trade or didn't set his TP, she didn't set the TP, let's see what will happen. All right. Nothing happened. Both parties were safe, showing how we placed our stop in a great place. Yeah, we placed our stop above that high, okay, which was enough. The market came back up in here after having some volatility, giving us a 1 to 4. pushed all the way back up in here. So even the higher risk position that wasn't able to take their profits here or didn't set their TP, they are laughing, they are winning. All right, as this market came and pushed down and breaks below where we saw a spike, which actually created some structure in here, showed that there was a huge amount of buying that pushed this market back up in here real quick. And the market was like, no, this is really showing me that the market wants to push down bearishly. All right, and look at it. Yeah, look at it. So, you know, when I show you this and we break it down, you've got to ask yourself, how comes why haven't I taken a trade like this? Or how comes I can't keep taking trades like this? It's just about putting together all the different elements. Let's recap on this and see how I identify this as a potential trade. Well, first and foremost, I didn't want to just use, you know, hindsight. Like, you know, how you can see those spikes in volume showing you some great structure. This spike is coming from the sell side. All right, so you have to obviously use common sense also when you're looking at it. But look, when this market was coming down here, making its impulse all the way down here, I don't know when it's going to stop. But when it started to kick back and break in structure in this direction, this is now becomes a retracement of this bigger push. So if this was structure, this becomes breaking structure indication. So break below this level, this is all indication. Okay, and then it coming back up here, this is all correction. So the question that I'm going to be asking myself when I'm seeing the market correct is, where is it correcting to? And I know commonly, not all the time, but more times out of 10, the market pulls back to a 50% off the impulse. The impulse is from up here to down here. Have a look at this. From up, just can move out of the way. From up here to down to this wick. Can you see that green line that says 50%? I mean, I don't know about you, but that's pretty much perfectly that the market came up and tapped 50% of the range. I mean, don't get more perfect than that. That's where 50% is here. So it's not like to say I can just hit the button when it gets to 50%. I can't. But what I can do is when the market gets to that 50% retracement, I can drop my time frame down like we did, drop it all the way down to our 5 minute, and then we're looking for what we look for. And what we look for is a break in structure, indication, correction, continuation. Okay? What's happened there? Indication, correction, continuation. When we was looking here and looking at our structure, we didn't quite get our indication on the 5 minute time. On the 1 minute time frame, I would have got a better entry up here. I'm not gonna lie to you, but I don't want you guys on the 1 minute time frame. So we're waiting for an indication. We're seeing structure in here, waiting for a break indication over here, indicated below this structure. We're seeing a, let me hide this for now because I don't want it to take up too much eye space. Oops. Hide this. All right, indication, we get a correction that came up in here, closed some imbalance. Then we've got a continuation over here, which closed, and I'm in the trade. And I'm either in the trade aggressively with my stop above the last high, or safer, stop above the high, the swing high. Now you're asking yourself, you know, which one should I take? Well, it depends. Are you somebody who you're not actively in front of your charts? If you get stopped out just by half a pip, are you in a position to get back into the trade? Are you somebody who you want to set that trade and go about your business and check on it in 20 minutes, half hour? You know, I would advise that if you're trading, you know, be locked in on your trading, unless you're taking much bigger zones, so therefore you're not in a 5 minute time frame, you're looking at hour highs and hour breaks of structure. Then maybe you can place that trade and then you can go to work and look at it later, possibly. Okay, but I personally think as a day trader, you should, you know, you have to be relatively present, even if you're checking back on it every hour or every half hour, at least looking on your phone, seeing what's going on. Okay, unless you want to, like I said, not do that, take a trade and look at it at the end of the day, which would be you not being here in a 5 minute time frame. It'd be you being out here looking for 1 hour, 4 hour breaks of structure, indication, corrections, continuations with stops above those levels, and maybe leave sitting in that trade for days. Yeah, maybe the whole week, who knows? Okay, so here we saw it. Came up to the 50% level. Look, boom, as it crossed that level 50%, look at it. My alarm bell goes ding-a-ling-a-ling-a-ling-a-ling-a-ling-a-ling. Okay, that was 50%. Now at that point in time, this market could just do this. Have a look. Could come up to touch that 50%, come down here, start going this direction. If that's the case, then cool. Right, there's always a 618, and there's always when the market decides it doesn't want to do that. But if the market touches my area, breaks that 50% area, ding-a-ling-a-ling-a-ling, gets my alert, and I'm looking now, I'm interested. I'm interested now. And then it starts to come down and break some structure on our 5-minute time frame. This is a close. Make a retracement and close down again below. I'm in me. Because I'm expecting this trade to turn around at some point. And then afterwards, my expectations are it to come all the way down and break this previous structure all the way down here. Why do I expect that? Because the bigger picture is that this market indicated, corrected, and I want to see it continue past this level. That's the bigger Russian doll. I've just zoomed in and done Russian doll in here and been able to get entry, but ultimately I'm expecting it to go past this level. Not even to just touch it, I'm expecting it to make a lower low. Let's see what happens. Lovely. Lovely. Yeah? Lovely jubbly. Because now it's made a lower high, lower low, lower high, and lower low. Now at this stage, I'm quite concerned. I want to take my profits. I want to at least protect my position from that trade all the way up here. Jeez, if I list it, let's have a look at that trade. If I can try and find where the little, this one is the high. I can't even see because it's so small. I'm gonna have to widen it up. Give me a sec. Let me widen up that little. I'm gonna get rid of this Fibonacci, which is just taking up eye space. And can you see these two little levels in here? One was the aggressive one. That's the aggressive one. And this one here. Oops. Need to zoom in some more. That was the lower risk one, I should say. This was the aggressive one. Okay, so let me move them over. The only reason I'm doing that is so that when I zoom out, and you can see it. It's a better view. So look, that aggressive trade. That's a 1 to 11. All right, and this safer trade, the 1 to 5. Great trade. And at this point in time, when I'm getting down here, we're at 1 to 11, 1 to 5, and we've just captured this liquidity here. I'm concerned of what? What am I concerned about? What am I going to be concerned about? What should you? Yeah, I'm concerned about these imbalances above that the market might want to, even though it wants to keep coming down, it might decide it wants to get back in here, closing up some of this imbalance on the 4 hour, on the 1 hour. Look at this 4 hour candle. Look at all that imbalance in here. The market might want to come up in here and close this imbalance. But I could, if I wanted to, be patient and just stay in there and let that imbalance come all the way back on me. When I'm at a 1 to 11, I'm not gonna lie to you guys, I don't want it kicking back on me. I want to take that money. And if it kicks back on me here, close that imbalance and then keeps going, maybe I got the option to get back in. But I don't really want to see my 1 to 11 go all the way back to a 1 to 2, 1 to 3, only to get back to a 1 to 11 in 3 hours time. I don't think that's the point. Like just to say, yeah, it went to my TP. It's a bit of an ego. Take the money down here, in my opinion. Take the money. All right, let's go and look and see what happened to it. All right, go to my 5-minute time frame. Market pushed through. Look, look, I'm in here. As soon as market come all the way down here, zoop, then starting to come down. I'm very, very concerned. You know what I mean? Maybe I'm placing my stops above 5-minute swing highs. Yeah, if you want, you can try and use the volume again to be able to give you some, clear areas, which isn't that clear to be fair. Oops, what are you doing? There you go. Maybe looking at somebody, see these little spikes in volume here? There's a little spike in volume here. Maybe you can turn around and say, okay, that little spike in volume here, looking straight down vertically, I can place a little structural level in here. See a little spike in volume here. Place a little structural level in here. So right now, if I'm seeing this market coming and breaking this structure, indicating correcting and continuing, I can get out because it's more than likely when I want to come and close this imbalance. But let's see. If it doesn't and it keeps pushing down, well, yippee-ki-yay. But if I see an indication, correction, continuation over this level here, which is the last high before the lowest point, have a look. That there is the last high before this lowest point here. All right, and coincides with this spike here in volume. So I can put a little structure line in here. Okay, now let's have a look and see what happens. Oh, we're at present time. Oh, this is present time. Okay. So in present time right now, I am a little bit concerned, or furthermore, not even concerned. I can, if I believe this market may come back and close this imbalance, once again, have a look at this. The same way I got in, all right, is I'm not saying that's what's going to happen. But I'm saying I can take my Fibonacci, go from the top here, all the way down to this impulse here, where it ends, and I can mark out a 50% line. Oh, what a coincidence that 50% is right there in our imbalance. Yeah, oops. In our imbalance, let me make it green. There, in our imbalance. Okay, so maybe if I start seeing this market indicating, correcting, and continuing, maybe there's a short-term trade, a short-term because it's against the trend. That's going to be from here up into these levels. What's that? It's only 30, 40 pips. Okay, but to get into that trade, once again, I'm going to need to see confirmations. Yeah, I'm going to need to see indication, correction, and continuation outside of this area here. Yeah, and at the moment, I haven't got no clear close really above here. If we had maybe this was a close here. Let me try and zoom in so you can see it. I want to make it real. I want to make it as though you guys were looking at it yourself and wondering. Yeah, maybe on the 5-minute time frame, this little candle here was a close above. All right, and then it made a correction. But when it made a continuation, it hasn't closed again above. It's just been wickage, wick. So now I really want to close above this wick, as this wick's done some damage and tunneled. And we haven't got that yet. And in fact, we actually got a retracement breaking some previous structure now. So it's voiding the fact that I'm waiting for just one final close up here. So now I'm ultimately still waiting for a indication on this time frame above this level now. Have a look. Above this level now. I'm waiting for some sort of indication. I'm waiting for some sort of, on this time frame, on this small 5-minute time frame, I'm waiting for some sort of indication. I'm waiting for some sort of correction, and I'm waiting for some sort of continuation. On a larger time frame, it's different. Because on a larger time frame, have a look if I go to my 15-minute time frame. But on my 15-minute time frame, this market is just, I'm waiting for a close above this structure, which I still haven't even got. I haven't got a close above that structure either. I've just got all this wicks. Okay, so 5 minutes good for us to be at. All right, we don't need to be any lower than that. All right, so even on the 3-minute time frame, we can see an indication here of a close that happened here. Then that retracement came all the way back down here, breaking previous structure, so avoiding the fact that I was just waiting for a correction and continuation, because this correction must not break the previous little minor structure, which it has. So now, even on this smaller time frame, which is 3 minute, I'm still waiting for an indication, correction, continuation, which I'm still waiting for in this 5 minute. I'm waiting for some sort of indication, some sort of correction, some sort of continuation. Only if, and that trade is only to potentially take this trade, this market up into that 50% level, which is going to be closing that imbalance. Why? Because I overall think that the market sentiment is going to be bearish. That's my bigger picture. Yeah, I overall think that market sentiment is going to be bearish, but I do understand that the market can make a retracement up into this 50% level and into this imbalance that we see, this huge 4-hour, hide this stuff, into this 4-hour imbalance. Let's have a look. Come on. I really don't know why. I think it's got to do with something between YouTube recording and TradingView and Zoom. It just struggles a bit. Like, Look, this big 4 hour imbalance. Look, gaping, absolute gaping imbalance. All right, but I don't know if it wants to go back for it now. It might want to push down some more first and then go for it. I don't know. Yeah, all of this here is a bit sketchy structure, but you know, if we was, when I say sketchy, it's not like definitively seen a huge impulse from a level, but you know, this level in here, we can see all of these little levels that the market couldn't break, kind of level in here, is an interesting area in regards to where we might see a bit of a reaction. But maybe this market decides to push down a little bit more first, then come back into here, and then break outside of this yellow line. Very possible. Yeah, very, very possible that this market decides to go like this. I'm waiting for it now to push up right now and break structure, and it doesn't. We just see do this, push down into here. If it does, I'm going to be looking on a smaller time frame, 5 minute, for an indication correction continuations. Maybe that's going to be the push from up here, close that imbalance, and then to say, you know what, yeah, we're ready, and for it to actually break outside of that yellow line and decide it's ready to start making this journey. Okay, or right now we see it break, clear out that imbalance first, and then just start making its way in regards to coming down in that direction. All right, they're both possible, and even more so, it's possible that the market decides to come down and touch that yellow line and push all the way back up in here because it wants to get even tighter in here. Yeah, all of these things are possible. Let me make them 3 different colors so you can see. This is possible. This is possible. This is possible. All right, they're all possible. I can get rid of some of these lines because this was explaining our 50% retracement, explaining our risk-free trade, and this was explaining some sort of structure that we could have taken that trade to first structure. All of those different things there are possible. Okay, which one do I like best? It's like the orange and the blue. You know, I don't fancy the pink one so much, but who knows? It's either the orange and the blue, and out of the orange and the blue, which one do I fancy even more? Probably the blue over the orange, but we'll see very shortly in regards to what this market here is doing. At the moment, we're getting a little bit of sideways action in here. Okay. Getting a bit of scribble in here, and I can definitely see that there's a little bit of liquidity, yeah, underneath here. There is some liquidity underneath here. Okay, so maybe the market might go for that liquidity first, start pushing down here, tapping into here, then decide it wants to do that. That would be the orange scenario. All right, or maybe not. We really don't know. Let's go and have a quick glimpse over here to see what's going on in the world. See what's going on in the world. And you know, there is some red folded USD news today. New York Empire State Manufacturing Index and Michigan Consumer Sentiment happening later on. There is that. I don't know, might have an impact on something. Okay, but remember, there's always news. You know, there's always some sort of red folded news of things that are going on all the time. All right, it's not like just sometimes there's news. There's always news. All right, there is always news. So yeah, so that's that. GU. Is there any other pair that someone wants to look at, or a question that wants to be asked? I think there were some questions that were asked to me. There were some questions that were asked. If we look. So the confluences. So Darren asked about confluences. Okay, so confluences are just, you know, things that back up your decision. Things that, like, when the stars align. Yeah. So if we was to look into the different confluences of, for example, this, I don't have to move off this. We can stay on this trade. Now, why do I want to do what I want to do? is because, you know, if you wanted to write some confluences on this particular trade, you know, I would say this. I'd say, one, we're at the top of our larger Russian doll. All right, let's go there. It's moving so well. So look, I'd say, yeah, first and foremost, boom, we're at the top of our larger Russian doll. All right. You know, I'd also say, which ultimately means, you know, premium. Okay. You know, I'd also say we have seen bearish react. We have seen bearish reaction from that level. You know, I'd also say we have seen break in structure. I can't remember what time frame it was up to. I think it was up to, I can't remember what time frame it was. Break of structure, you know, bearish at that level. These are all confluences. These are all things, these stars are aligning to turn around and saying, okay, this is the reason why I'm making that decision. You know, we have seen a 50% retracement, you know, indicative of, you know, bearish move, i.e. 50%. i.e. a 50% bullish retracement, meaning that the market is overall bearish, but when we see a 50%, we think about that ball falling down the stairs. That 50% retracement is indicative of the market wanting to go down. Yeah, think about it. You stand at the top of the stairs, you drop the ball, it doesn't bounce back up to your hand. It bounces 50% up and it falls further down to the next step, and then bounces 50% up from that step, and then further down into the next step. You know, that is ultimately, you know, what we've seen. Happen. These are all different confluences. Yeah. Then you can turn around and just say, you know, we've seen the indication, the correction, the continuation on our chosen entry time frame. You know, like these are all confluences. These are all going to be a list. Or when someone says, so why did you take the trade? For the people that are in the United in Funding Discord group, which is set up like now, we're just furnishing it with right information. Hasn't been too many trades this week and stuff that has been put in there by anybody, and anybody can put it in there, anyone that's in that group, right? That's taking the United in Funded initiative with us, all right? This would be all the reasons. So Jay, why did you take that trade? Well, we're at the top of a larger Russian doll, you know. You know, maybe even the largest Russian doll. If you really want to go there, I think this is probably the largest Russian doll. Obviously, those of you who understand what I'm talking about, Russian doll, I'm just talking about a higher time frame structure. I'm talking about premium. I'm talking about top-down analysis. Yeah, top-down analysis. We're right at the top of that range. And now, yeah, overdone. Yeah, we're right at the top of that range. This is what this yellow line. Okay, and I want to be selling it, but I haven't got the confirmations yet. You know, it's broken out of some smaller structure. This little impulse here broke out of that impulse, but hasn't broken past this yellow line here. This Russian doll, this bottom end of the Russian doll yet. So I'm hoping we see that, but we haven't seen that yet. But on a smaller time frame, how we've analyzed it, and I just showed you the 5-minute time frame, etc., we can see how we would have gotten in. And in this instance, what one of those trades was like a 1 to what, 11? 1 to 11 based upon 5-minute breaker structure. I told you guys you can be on 5 minutes. 1 to 11 trade. How many 1 to 11 trades do you need to pass your challenge? Yeah, not too many, even if you've taken some L's. Okay, so I'm saying to you, like, these are all different confluences, and there's probably more as well. We can identify more. All right. So we're going to go over a couple of things also. We're going to understand. I want you guys to understand also the sessions, okay, and the different nuances of the sessions. All right. So there's something here called kill zones. You can go into here, go into your indicators, and you can type in kill zones. This one's going to come up. I want you to. It's by Oscar VS. All right. Oscar VS. So it could be Oscar VS. Who knows? But this one here, yeah. And when you click it on, on your chart, it's going to show you. If you zoom down in certain time frames, I don't know why it's not showing it to me straight away. Can you see those lines? Those lines on my screen. Well, it actually doesn't come now. It actually comes fully colored in, showing you the sessions. All right. So if I was to do this. You can actually put these colors in, and this is showing you the sessions. All right. Anytime now, as if by magic. There you go. That is showing me that red band is the Asian session. A nuance of the Asian session is typically the markets are consolidating. Yeah, this Asian session you can see is starting from around about 9 o'clock. Let's say 9 o'clock. This one's starting from a bit earlier than that. Let me see what time zone I'm on. I think I'm on New York time zone. All right. So if you wanted to understand what it was in London time zone, so you know for yourself, this Asian session here is starting off around about overnight from like 11 o'clock. This is going all the way to the morning. All right, to 7. And then this yellow line is showing London session. Yeah, which is ultimately we're talking about from around about 7 o'clock, going all the way over, and you can see this overlap here. Now this overlap is overlapping with New York session, which you can see starting. This is saying about 12:30. Now there's different opinions about exactly where these sessions start and that, because you have kind of pre-market, etc. But this is just showing you. Now let me show you this overlap here is really where all the action takes place within those overlaps. Because that's when the most volume, that's when London's here hitting the buttons and New York's here hitting the buttons at the same time. So you can even look historically around when these moves happening, when you can, and realistically, you really want to be in a trade in that session where there's lots of action, lots of volume. Look at let me zoom in so you can see. Look at the Asian sessions, especially in this market. It's GU, all right? It's Great British Pound and US dollar. So in the Asian sessions, i.e. evening to morning, look at it. He's doing the hokey cokey sleeping. Look at over here. He's having a little sleep over here. Look at over here, look. Have a little rest over here. Look at over here, look. Have a little rest. Can you see this? Yeah? So this is the nuances. This is the characteristics of GU in the Asian sessions. It goes to sleep, it consolidates, it goes sideways. Yeah, and then you have London that starts, and you can see some action in London because there's a couple men pressing the buttons. Okay, cool, we're having some movement. Yeah, but when New York opens up, watch. Boom. Big old energies coming from up here. Boom. This is when everyone sat down, the big boys have sat down and they said, okay, let's really get to work now. Yeah? And we see it over and over again. Have a look here, look. Just sleeping, kind of, a little consolidation. Let me move this out of the way. Okay. Doing a little consolidation. Let me wrap this text as well. Oh, it is wrapped. Okay, I just haven't pulled it over. Pull this over. Okay, you can see, look, just doing the hokey cokey in here. Then London comes and we get a little bit of action. Then when the overlap happens, boom! So if you was thinking about a time period that you really wanted to trade because you're not too sure, it's going to be this overlap time. This overlap time is when it gets active. Yeah, when it gets active, and it starts to activate, because you've got so much volume in the market. You've got so much volume in the market. You've got lots of people placing orders. You know, you're getting lots of orders being placed. Yeah, you're getting lots of orders being placed. So what I was getting at is understanding. Say, for example, we was looking at a trade, the trade that we've just been looking at here, GBP USD, for argument's sake, and you've marked it all up, and you're sitting here, and you know, Jay said we're kind of broken some structure. We might come back here and something. You might see, if you see in London session, this market start to go back up into here. More than likely, when New York comes and that overlap happens, boom, you might get that energy pushing it to where it wants to do. Or vice versa, this is kind of like, this trickles around for now, then boom, you might see it happen in the overlap New York session. But that's as you looking at your times as well, and understanding, okay, damn, I've been in this trade for ages and nothing ain't happening. Well, you are trading in, you know, low volume, kind of indicative of not really the price doing too much. Or if you take a trade and for whatever reason you're in that trade overnight, and you're like, oh my gosh, you keep looking at your phone and the trade's just going backwards and forwards. Because you're in Asian session, bro. Sleep time. Have a look. Asian session time. Let's just consolidate. Let's just consolidate for a little while. And just that's what we want to do. Just consolidate. Yeah? So understand that there are different sessions. And you can use this tool and you can look back historically and have a look and see what happens in these different sessions. Look at here, I'm just going to random places. Look at over here. Sideways. Sideways. And then London kicks off, we start seeing a little bit of action. Indication, corrected back to 50% of the range. See it? Look at it. Indication, corrected back to 50% of the range. Then you could drop your time frame down, get an entry here. Boom, when the overlap happens, look at it. How? Trading done for the day. Go about your business, go live your life. Have a look at this one. Sideways, you see it? Sideways, indication of what it wants to go and do in London session. Correction, as soon as the overlap happens, boom, go about your business. This is another play. This is a playbook one we was going over back in a little while back. This is a play, another play to how you can use this. So this is another one in your playbook that will be in the course material. Another one in your playbook that you can be able to look at it and be able to understand what's happening. Yeah? Now it doesn't happen every single time like that, but 8 out of 10 times it will. 7, 8 out of 10 times it will. Okay? Have a look. This one's a bit different. This market was in here, it's kind of going sideways-ish in here. Have a look. Kind of in this little area here. Asian session. All right. We saw an indication, correction, continuation of this market pushing up in London session. Very interesting. Pushed up in London session. But as soon as it came up over into this level up in here, okay, we started to see structure breaking. Look, structure, we've got indication here. You can't see it, but just imagine what it's going to look like on a smaller time frame. Don't let me have to zoom in just to prove you right. Here, prove myself right. We see it market breaking outside, price breaking outside the market, indicating, correcting, continuing. Before what? Before what? If you've been watching what I've been saying, because I'm giving you some source right now. Don't get twisted. Yeah. Before the overlap of the London and America, New York session. As soon as the overlap kicked in, the indication, correction, continuation has already happened. You should be in this trade with your stop above the high. Aggressive entry, which is the one we just looked at, would have done you well. Safer entry would have done you better. Yeah. And when did it stop? As soon as the overlap finished and London finished. Look, to the dot. Done with that now. Now we're just doing hokey cokey. Hokey cokey for a little bit of time overnight. Look, when the market goes to sleep, can you see? when the market's closed for an hour. Yeah. And then the Asian session starts kicking in, doing more sleep. And then for this London session, we might see something happening. We might see some sort of indication, correction, continuation, maybe. And then for when the overlap happens, we're expecting to see some volume or something happen, giving you some source of how you can now take it to the next level of understanding the strategy. And you can, if you don't believe me and you're not sure, back test it. Let's just go back. Let's just click this. Let's whack it all the way back to over here. Let's whack it all the way back to over here for argument's sake. Just a random place. Okay, and let's have a look. So we can see over here the market's going sideways, Japanese, Asian session. All right, let me drop my time frame down because it's quite small. All right, and we can put a box around that whole Asian session, sideways action that's happening. Okay, all the way to, you know, around about here. So all within the Asian session. This is all sideways. And then at that point in time, we're waiting for an indication. Watch this. This one's actually fucking my friend. Perfect. All right. Have a look at this. We've seen an indication. We've seen a correction. We've seen a continuation. You start to take that trade bullish. That's fine. Because this is this is London session. You take this trade. You're interested in this trade. Boom, boom, boom. You take it. It comes up to this level. As it comes up to this level here, boom, 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 boom. All right, you've got a nice 1 to 2, 1 to 3 trade, but you see the market start to break structure against you. You'd have gotten out that trade, and then you'd be watching it. But where does the market want to come? The market wants to come when the overlap starts to happen here. Boom, when we start seeing the volume, the market makes a correction. This is a bigger correction all the way back down into the level where we broke the structure here. All right, think about our battleground. So when we broke the structure here, it comes back. Brenda comes and tells everyone to come and check what's going on. Comes right back in there, boom. And then for the overlap, which is this yellow and white overlapping, the market is off. When does it end? Right when the overlap finishes. Yeah? Now that is like, look, let's go again. Let's just go again. Let's go random place. Let's drag it back. Let's drag it back. Now, I'm not saying it happens every single time. It doesn't happen every single time, but look at it here. This market is kind of, you know, just kind of trickling around in this little level in here, this Asian session. Okay. Now, ultimately, I want to see what it does outside of the Asian session. This one and London session, you know, it had a little move from down here, the bottom of this little range, pushed up, but nothing, didn't break outside the box. But as soon as the overlap happened here, boom, the overlap happened, indication, correction, continuation somewhere in here on a smaller time frame, maybe an entry. That's where the energy happened. When did it stop? Not quite on the dot, but after this little overlap's finished, the market was calm again, just kind of trickling, going sideways again. Let's go and look at another time. So I'm just literally got scrolling back. I'm just pulling it back. All right. So Asian session, we did see some little bit more energy here in the Asian session, a little bit more less sleepy. All right, less sleepy in between here and here in this Asian session. But at that point in time, I'm waiting to see what? Some sort of indication, correction. This isn't a continuation, didn't close above here. Came all the way back down into these levels here. Then the overlap happened. And from the overlap, when the market started overlapping here, in this level here, this could be it. I need to drop to a smaller time frame here, but either way, let me do it based upon this information here. Let me try and draw this a bit better now to the top of this range. At the point when this market broke outside of here, just about indicated, correct, closed above here. We saw a little energy up for the overlap, and then more or less, as soon as the overlap finished, the market went back to sleep again. All right, that wasn't the best of examples, but still you can see it close. I'm showing you something. All right, there's definitely something to be learned. Have a look here. We're just pulling it back. Trust me, these ain't all ones that I've made earlier, and I'm just going over it. These are ones that I'm doing it live in the mix. Here we go. Asian. Kind of was in here in this Asian session. All right. We can pull this out some more. We got a little indication over here, but we didn't get the correction, or we didn't get the continuation that we needed to see. The market came back in here, and then nam, we see it drop below this level. We understand that this could be a liquidity grab, just like this was a liquidity grab. Okay, come down here, boom. Now, as we know, in the London session, the market starts to do something. On a smaller time frame, we could have got into this trade after we saw this liquidity grab with this market pushing up here. Okay. When it got up there and we started seeing, have a look, the market breaking structure, because I would draw a line like this. This is before the overlap. The market's made an indication, made a correction in here, made a continuation. If we wanted to, we could have taken that trade with our stop above aggressively, which would have been above the last high over here, or safely above this high over here, but let's just say aggressive, or just to make it more compelling. And look at the market, run down here for an easy 1 to 5 trade on an aggressive entry. Okay, let's go again. I'm showing you the source. Please don't tell me I'm not showing you the source. I'm giving man the source. Yeah, people that are here, have a look at this here. This is Asian session range. Within this range, once again, this market was going sideways, doing the hokey cokey. I'm waiting to see what it's going to go and do. This might be a little bit of a liquidity grab, might be a little indication. I can't actually see no closes here, just wicks. So it doesn't really mean anything to me. Maybe this is a little close over here, or maybe I've just drawn the box terribly, but I don't get that continuation, doesn't close above here. Have a look. This is London session now, so we're just seeing it trickle in. So now in London session, we see an indication, we see a correction, we see a continuation, and the market does push down a little piece here. But at this point in time, when the energy kicks off, when we're talking about session starts to kick off, we've seen some additional volatility in here, and the market then kicks back again. So here, you wouldn't have lost this trade, because from here, this is me looking on a 5-minute time frame. From here, maybe you should have made it either risk-free or been happy with your 1 to 1.8. All right, maybe. And then so from here, you see the action start from here, boom. So if we was watching this market actively, when the overlap happened, all right, we're seeing structure being broken. Structure was broken by this big old push over here, this wick. On a smaller time frame, these are candles. Came like that, you don't need to be in this trade. Especially if this market came back up here, it's broken past, it's done the most. So this isn't a great one, all right? So that would, I don't know, but maybe that one's a break even, all right? Let's have a look, let's go back some more, I'm just pulling it back. This one's different. We have seen in the Asian session this market continue to tumble. And remember, other stuff's going on in the world. Like, there could have been a speech that happened in that night. There could have been all types of stuff happening of why that market wasn't as sleepy. And it was quite sleepy, if you think about it. These are the small little movements. But over time, the market, this Asian session pushed down here. London kicked off over here. And the London session kicked off over here. And, you just see, remember as well, this is another thing, sir. Another thing I'm not doing is I'm not putting these into context in regards to the Russian dollar. So for all I know, this is at the bottom. In fact, it is at the bottom of Russian dollar. Look at the yellow line. See this yellow line here? This is our bottom of our Russian dollar. Yeah, so even better that I drew that in early. So when this market's coming down here on the London session, we're seeing a little bit of an indication, correction, and continuation. We know that we're at the bottom of this Russian dollar. So we're not going to be, in a hurry to be like, yeah, let's sell into the bottom of the floor. We'll be like, yeah, it's just setting up. Yeah, and then when we see, this market breaking structure, watch, indication, correction, continuation. Well, if we decided to do that, placing our stop below the last low, but then we'd still be in that trade as the market came and touched at the bottom of one of our Russian dollar floors, and pushed up to here. Now, whether or not we would have been in that trade so big here for the 33 pips, maybe. Either way, we still got up to a 1-to-1. But this market here is dancing at the moment in here, pushed down a little bit lower. Let's go and look back. Like I said, it's not every single time it works, but if it works 8-9 times out of 10, listen. Let's have a look at this. Look, I can see some little impulse happening over here. Let's check out this one right here, and then we'll finish up. check out this right here. So, you know, this is the Asian session. Yeah, like so. And it actually starts to do some things in the Asian session. In fact, let me pull this line all the way up to Asian session. Asian session something it was rocking and rolling Asian session. Yeah, all the way up to these levels in here. All right, all the way up to these levels in here. There's a bit of a crossover between Asian and London. All right, Asia and London. But at that point when we've got up here, if we're drawing our lines in here, our impulse, we're now seeing in that London session on a smaller time frame, not so much on the 5 minutes, on a smaller time frame, we're seeing some indications, some corrections, some continuations, all right? And then we see this market ultimately through the London session moving where it wants to go, like so. And then when the overlap happens, we're seeing it accelerate down into this level, yeah? Down into this level, accelerate. This one's a bit different, started moving more in the London session, which is fine because we know it does move in the London session, there's volume, but we can see it accelerate with bigger candles, bigger red candles happening when that overlap happened. All right. And we can just keep going. I'll do one more. And like I said, literally you can go in whatever market you want to do. Let's look over here. Let's get away from previous energy. Let's look over here. Have a look. Look at Asian session. Sleeping, dribbling. Yeah, apple crumble in the eye. Yeah, just all over the place. We can see from here to here, this market's just going sideways. There's a little bit of an overlap when London opens. And then we see indications, corrections, possible continuations here. And we can see how the market, in this instance, came back and made a retracement to 50% of the impulse after the fact. So if we decided that this was an entry here on our 5 minute time frame, our aggressive entry got stopped out, yep. Our safer entry didn't, yeah, over here, as the market came back and it retraced to 50% of the consolidation. See the consolidation range here? If I was to put a line in at 50% on that little middle square, market came nam, back there, and when the overlap happened, start again active. Push up. All right, start again active, push up all the way up in here. When did we get a conclusion of that? Is when this session finished, we actually got an indication, correction, and continuation in the opposite direction. Exactly when the session ended. Look, indicated to go down, corrected up in here, closed the imbalance, came down here, closed, candle right exactly when the session finished right there. Because if I was drawing in some lines, the lines would look like this. Oops. The lines would look like this. Touching where? The last low before the highest point. Last low before the highest point. So therefore that would be an indication. Close, breaking this structure in here. This will be a correction that didn't break the previous high. Didn't break this previous high. Indication, correction. The continuation started coming down here, trickling, making little candles. And where did it close? Where did we actually get a candle that closed below the level? Right here at the end of the session done. So if he was in that trade, you'd be out by now. Definitely on a 5 minute time frame. I would have really dropped my time frame to 1 minute and had an excuse to get out at near the top and get broke outside of this range. But you'd be out here, or cheekily, if you wanted to trade into the evening, all right, which the market does still move, that would have been an entry for you to be going in this direction, which only went for a little bit until the market started to close, started to do nothing, and then the Asian session kicked in, and we decided that we just wanted to go, as we know the characteristics. Generally, in my Asian session, just wanted to say, you know what? Oh, we're tired. We just want to go sideways. Yeah, we just want to go sideways. And then we got a little indication, a little correction, a little continuation out of here. But we're right by the bottom of our Russian doll, and it's not that interesting. The market actually started going sideways again. But either way, we've done it about, I don't know how many times we did that. Maybe about 10 times just now. And out of 10, you can see that more times out of 10, you can use this understanding of when volume comes in the market, of when at least this GU market and other US dependent markets, when they're going to get that energy. If I was doing that US 30, you'd see the exact same thing-a-ling. You see the exact same thing-a-ling-a-ling-a-ling-a-ling. All right? If I do this, you go to present time, have a look. This is the present time. I'm going to finish up with this. Oops. Present time. These zones. Look. In here, from about here to about here, this is all that little sideways action. So we might see, you know, here London's already started kicking up, had a little bit of overlap. We might see that it's going to take for US Open to happen before we kick back up in here. Or maybe not, maybe we start to trickle. Either way, I'm saying right now, out of this little level here, we haven't really seen an indication out of this little Asian session sideways action. I'd like to see some sort of indication, correction, continuation pushing up into this level, or not coming down here. Wants to continue, indicate, correct, and continue, because maybe it wants to get back to this little yellow line before it does something else. Maybe it wants to break outside of this bigger Russian dollar as we described. Guys, I've gone over that 10 times just to impress it upon yourself. I've put in here in regards to a question that was asked about confluence, okay? And we can see in here that these are the type of things that, for example, are confluences, are things that back up our ideas, all right? You know, we could add in here some other stuff. We can add in here that it was, you know, the session, you know, it's overlap session, much volume. We've seen this thing happening, or we've seen things setting up on the London session just before the overlap occurs. Yeah? These could be additional confluences to make you say, yeah, I'm getting in this trade, bro. There's like the stars are aligning. Now, if you don't have these confluences, right? And like I said, this is general confluence. The confluences for us are higher time frame market structure, Russian dollar, understanding where we are, trying not to take trades from the middle of a range, understanding premium, understanding, discount, waiting for an indication, close, correction, close, continuation, or not correction, close, indication, close, correction, and continuation, close before we take a trade. Making sure that we place our stop losses, understanding there is going to be certain levels that we can place that stop loss. One's going to be a safer, lower risk level with lower rewards. One's going to be a higher risk level with higher rewards. Yeah. Either way, we have to make sure that we're getting at least, you know, a 1 to 2 in any trade that we take. We don't want to take a trade where it's only got 1 to half in it, or 1 to 1 in it. If you want to take a 1 to 1, that's fine, but you want to get into a trade that's got a 1 to 2, at least, that you can see that distance in there. So therefore, if you're giving yourself a 400 pip stop loss, and unless that trade's got 800 pips on the upside, there's no point taking that trade. Okay. So yeah, I mean, I know my chart's looking mad like soccer charts, but I've just showed it to you so you can see these kill zones. I showed this trade in here. One is a 1 to 11, one is like a 1 to 6, 1 to 7. Fantastic. I've shown you that where we are right now, kind of going sideways off of the back of the Asian session, seeing what's going to go on. I've also showed you that, you know, we've got red folder news happening today in regards to some Michigan statement. Michigan sentiment, sorry. Where is it? Apologize for the struggles. See the struggles. Yeah, Michigan consumer sentiment, all right, happening. So yeah, there you go. Anything you want to ask me, guys, before we finish up? Anything you want to ask me before we finish up?
The session being recorded.
Has been recorded, yes, so you can go back over it because there was some source that was dropped, some definite source. And
Definitely tune in.
Yeah,
Thank you.
So you can definitely watch this one back. All right, cool. I'm gonna wish you guys an absolutely fantastic day. It's Friday. I didn't have as many people in the session this morning, but it's all good. You are here for your own reasons, so that you can learn and you can empower yourself. And yeah, guys, good morning, God bless. What I'm going to do is I'll probably put on something in regards to trading. I think we'll put a little trading video on so we can watch it something different. I don't know what it's going to be. I'm literally going to go and click it and see. And you know what I like about now being able to watch trading videos or strategy videos is because I can compare it to my own strategy. And more times out of 10, the same thing I see people talking about is like, it's the same. You know, it's the same stuff. It's the same, there's nothing different. Maybe sometimes you hear a little bit of something like, interesting, then you're gonna go and check it for yourself. Okay. But you can't jump from strategy to strategy to strategy. That's not gonna help you. All right. What you're gonna have to do is you're going to have to find an education or an understanding of the markets that resonate with yourself. Hopefully it's me and be able to be like, listen, I get what Jay's saying to me. If I can pick up any little additional little bits of source from here or from there, well, then great. But the reality is that I understand how to trade. You know, everything else is just nuances of it. So I'm gonna go on here. I don't know. All right, well, I'm going to put there's something here that says easy ICT scalping strategy that passed my prop firm challenge. All right, guys, for the people that are home, love them.